to go straight to Dallas, where Carl is holding court at the Business Council CEO Summit. Good morning, Carl.
Throughout the morning, but first, another red letter day for the blue chips as the Bulls now have Dow 12,000 within sight. Unbelievable yesterday, that big move put us within less than 150 points away from 12,000. For his analysis, we're joined by Rafe Resendes, co-founder of the Applied Finance Group. And reading your notes, I'm with you here, Rafe. I'll tell you why. On the way up here, and people looked at me like I was, Forrest Gump, but I said, the market can't go up till it gets through the old high. And what I meant by that, we've had 6 3/4 years. We've had some movement in the market up, but until you get through where we've already been, you don't feel like the market's going up like it did from 82 to 2000. So it is significant that we've got through, right?
I think certainly psychologically it starts to bring a lot more attention to the market. People reading about it every day in the news. The Dow obviously is kind of a little bit of an odd index, right? The way it's constructed based on prices.
It's correlated with the others highly, though, right?
It is. I think the biggest factor at work, though, is that ultimately we're dealing with the biggest stocks in the marketplace. And this is a group of stock that's been down over the last 5 years. They've looked really cheap for the last 2. And now we're starting to see the rotation come into them. And I think you're starting to see a lot of the leaders that people recognize and get excited about back in the marketplace again, and money starting to move in this direction.
But when you think about it, we just broke this new record, and we're so close to Dow 12,000, like a percent away from Dow 12,000. You hit Dow 12,000, how much does that add to Joe's point, the psychology of folks saying, hey, the market's moving higher, time to get in? Because inflows have been a little shaky for a move to a record level like this. Can that a 12,000 level bring folks in and make it run higher?
Maybe it's the 12,000 level that brings it in, but essentially I think, you have the conditions in place that can really sustain a move in the large cap side of the marketplace. I mean, 4 months ago we were talking about the 10-year bond yield creeping up. Since then it's dropped 50 basis points. We have oil prices that have been dropping off, basically giving retailers a tax refund. Profitability for these large cap firms, they're all still creating shareholder value, earning more than their cost of capital. And at a fundamental level, these large firms are relatively cheap in the marketplace still.
We had, at the last time we were at 12,000 or 11,700, the multiple on the Dow was what? I mean, just about every Dow component's earnings have continued to go up year in and year out as the multiples come down. It's a totally different underpinning to where we were 6 years ago.
Exactly. It's a different environment, and in what we're seeing is that from an economic perspective, these companies have been making solid investments, earning more than their cost of capital, if you will, what we as investors require them to earn, allowing them to create value and generate quality growth.
The other rep on the market was that at 5.25%, you can't have a bond rally like we did in the mid-90s but we got one somewhere to 4.5, and who knows? I've had people say that we're going to the 3s again on bonds for some reason.
With real estate prices selling off a little bit here where we are softening, we just don't see the same pressures from an inflation perspective that we were talking about 6 months ago. It's just a very different environment.
How'd you like to be short the market, number one, the last couple of days you'd be covering? Or eventually you get that feeling when you're out of the market, and there's a lot of strategists that didn't want to play in here, and then you start seeing days like yesterday, and it's like, whoa, I'm going to be trailing all of my peers if I don't, and then they start chasing a freight train. It's possible. Who knows what's going to happen?
And then you still have the whole NASDAQ side, which is so far behind.
Right.
But there's a lot of quality names floating around in there. So a lot of interesting things that can be happening between now and the end of the year.
Christmas. Yeah, it's practically Christmas.
We did 6 3/4 years for this. That's all. Watching the markets here at CNBC.
March of the Lemmings.
16 days. That's a horrible thing to say. You just popped my bubble. Thanks, Rafael.
All right.